Joining us right now is Stephanie Link, Hightower Chief Investment Strategist and Portfolio Manager. And Stephanie, let's start with this news that we're hearing. Again, we've only heard this in the last 10 minutes or so, but there are headlines that China is investigating Nvidia over what they say is a suspected violation of anti-monopoly law. Nvidia shares right now down by about 2%. And I think our first question was, wait a second, do they even sell chips to China? Turns out they do. I think in the July quarter, they sold something like 12% of their revenue, $3.7 billion, accounted for sales in China. What do you think of this news?
I mean, I think we just have to get ready and just get used to this kind of thing, right? Because last week, the U.S. barred semiconductor companies from selling any chips to China. And that's one of the reasons why Applied Materials fell pretty substantially. Lam Research, those companies have almost 30% of their revenues to Chinese companies. So you can see why they fell. 12% is probably manageable, Becky, but I just think we're going to have to get used to this. It's back and forth, and that's one of the reasons why I think the semiconductors have actually paused, right? I mean, Nvidia and Broadcom have been the stellars. They've been the standouts. And I think they will be the long-term winners for years and years to come. But I do think that they've had a nice run, and overall the semiconductors over the last couple of years have had a nice run. And so I wouldn't be surprised to see, just some volatility, and maybe they pause for a bit. That's one of the reasons why software has done so well, because you're seeing money come out of semis and go into software.
I guess that raises the question, though, of so many other companies that have big business or that are reliant on China for manufacturing, whether that be Apple or Starbucks or Nike. A lot of those companies are making moves to move their manufacturing or to try and expand their manufacturing reach from where they're getting these things. But it's not an overnight process. Do you sell those stocks as a result of what you're seeing this morning?
I don't think you sell those stocks, but I am glad to see over the last 4 years that these companies have actually been moving their businesses out of China and around the world. One of the reasons I like India so much is I think that they are an absolute beneficiary of this thing that's happening. And also, we've seen and we've been talking about reshoring and onshoring here in the United States. That is alive and well, and a very, very powerful theme, I think, Becky, for the next decade to come. We're going to spend $4 trillion on the energy transition wave, if you will, between now and 2050. And I think this is all part of that, trying to get supply chains here and so that companies can diversify and not be in the position that they were in when we saw COVID.
All right, Steph, let me ask you. Tesla may be a very unique company in this whole mix just because of Elon Musk's close ties to President Trump. Can he walk this line because China's not going to want to aggravate someone who is so close to incoming President Trump at this point?
Yeah, I mean, I think that's the biggest question. We'll have to see. We'll have to wait and see. Certainly, just by reaction of the stock price since the election, I think people believe that he can.
All right, let's shift gears and talk a little bit about the inflation numbers that we're going to get this week. We just mentioned CPI on Wednesday. The producer prices come on Thursday. This is all ahead of that Fed meeting next week. It's hard to think that we're not going to get a cut next week when the Fed meets, just because that's been kind of programmed in. But if there was a really strong inflation number, I guess that could change minds.
For sure. I think we're all are watching the numbers this week. It'll be very important. But I think we have to just step back and see if inflation is a little bit higher than expected. It's because growth is a little bit higher than expected. We grew 3.4% GDP last year, Becky. We are on track, according to the Atlanta Fed tracker right now in this quarter, at 3.3%. The consumer has actually stayed in and hung in remarkably well. Manufacturing is starting to turn. I know we just talked about reshoring and onshoring. That's a theme by itself. But if the rest of manufacturing, which has been in a recession, if that actually can start to get legs, that's actually positive. And I felt good about the ISM manufacturing numbers last week because they are seeing an improvement. Still in contraction, but seeing an improvement. We even saw existing home sales up 2.9% last month, year over year. So I think the economy is doing better. If that means inflation is a little higher, from an investment point of view, I would rather better growth and a little bit of higher inflation, because profits actually can go higher as a result. And that's what I care about from an investing side.
Very quickly, we started the show with J.P. Morgan. I think we were talking about J.P. Morgan saying that maybe the Trump trade is running thin because we've seen so much movement because valuations are so high. Do you agree with that or not? Because the growth story that you're talking about is clearly a motivator.
It is, and honestly, Trump is inheriting a strong economy, and I think that his pro-growth initiatives, lower deregulation, lower taxes, I think that will lead to continued strong growth. Do we see an acceleration from 3.3%? I don't think so, but even if we were at 2.5, 3, that's above trend, and that is positive.